The US Federal Reserve is to continue its stimulus program, unchanged, printing money to buy $85 billion worth of bonds each month. At their monthly meeting, Fed Chairman Ben Bernanke and the other policymakers concluded the US economy continues to recover but is still in need of support. They offered no indication that a reduction in the pace of the bond buying program is imminent. They also voiced concerns about higher mortgage rates and the risk of inflation falling too far below the Fed's target. The financial markets expect the wind-down process could begin in September, and the bond buying might end entirely by the middle of next year if the economy progresses as expected. Fed officials met as we learned that US economic growth unexpectedly accelerated in the spring. Between April and June, there was a rebound in business spending and export growth, while government spending cuts eased. Changes in the way that GDP is calculated meant growth last year was actually stronger than previously thought, at 2.8% rather than 2.2%. The spring of this year saw annual growth of 1.7%, but the January to March period was revised down from the previous estimate. Consumer spending, which accounts for more than two-thirds of US economic activity, did slow from the pace in the first quarter, but remained strong despite higher taxes. And the rate of savings increased, which, with an improving labour market and rising home prices, should help to spur consumer spending in the second half of the year.